Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings so you don't have to. Today we are diving into the world of mutual funds, and boy are they as exciting as watching paint dry, kidding, or am I? These filings, these shareholder reports, are super important for investors, and we are here to decode the latest one from Mutual Fund Series Trust. This report covers a bunch of Eventide funds, all with different investment goals from July to December of 2024. We'll look into what they hold, how they performed, and what it all means for you if you're an investor. Let's start with the Eventide Balanced Fund. Its goal is income while still growing the investments. First things first, what did it cost to invest in this fund? For their Class A shares, it would be about $55 for every $10,000 invested during that 6-month time. This is an annualized expense of 1.07%, so that money would go to operating costs of running the fund, such as management and administrative fees. Keep in mind, it can be hard to know exactly where your money is going. This particular fund holds about $381 million in net assets, and it juggles around 160 different investments, which is a lot. The turnover rate, which is how often they buy and sell things, is 26%. It's not super active. What is this balanced fund invested in? Their biggest holding is Trane Technologies, a company that makes heating and air conditioning systems. Following that, they are invested in Arthur J. Gallagher, an insurance brokerage, and N-CSRS Electric, a company that makes electrical connection and protection products. A lot of infrastructure and industrials-related companies. This fund is trying to be safe by investing in a broad range of companies. Looking at the breakdown, over half of the fund is in common stocks at 53.7%, and then corporate bonds make up 20.4%, with another 20.8% invested in U.S. government and agencies. The rest of it is spread out in smaller portions across municipal bonds and some asset-backed securities, so it's a mix of stocks and bonds. Next up, let's dive into the Eventide Core Bond Fund. This fund focuses on generating income from bonds, but at the same time is attempting to grow the money. If you had invested in Class A shares, it would have cost you $42 for every $10,000 you put in, and this comes out to be 0.83% annualized. For a bond fund, it is trying to keep the costs pretty low. This fund is a bit smaller than the Balanced Fund at about $151 million. They have only 98 different holdings, so it's pretty concentrated. And they don't trade a lot. Their turnover is 7%, which means they buy and hold onto their investments. What is in this bond fund? One of their biggest holdings is a bond from JP Morgan Chase paying 6.07% interest, and that it's not due until 2027. They are also invested in bonds from the Federal National Mortgage Association, or Fannie Mae. Those are also paying fairly high interest. Diving into the weighting, a big chunk around 46.5% is in corporate bonds, and 43.8% is allocated to U.S. government and agencies, with 7.8% invested in municipal bonds. Most of the risk is in the corporate side, and then there's municipal bonds that are known for being tax-advantaged. Let's head over to Eventide Dividend Growth Fund, previously known as Eventide Dividend Opportunities Fund, and this fund is all about growing dividends, which means they want the companies they invest in to grow their dividends over time, and they do it for the long term. If you had invested in Class A shares, it would be $61 out of every $10,000 you put in, with an annualized rate of 1.17%. Higher than the bond fund, but lower than the balanced fund. This fund is huge, with $1 billion in assets. However, they keep it focused with just 58 portfolio holdings, so each of those positions is fairly large. Their turnover is at 28%, so they still aren't trading a lot. The biggest holding of this fund is Trane Technologies. After that, they hold Arthur J. Gallagher and N-CSRS Electric. These are the same top three as the balanced fund, so this fund is clearly doubling down on those companies. Nearly all 99.7% of the fund is invested in common stocks, with just 0.3% in corporate bonds, so it's almost exclusively stocks. They seem very bullish on equities. Now we get to the Eventide Exponential Technologies Fund. This fund is targeting what they say is long-term capital appreciation, but they plan to invest in exponential technologies, which makes it sound risky because it probably is. The cost, at least for the Class A shares, was $89 per $10,000 invested, with a rate of 1.67%, which is more expensive. This fund can be volatile, so you have to pay up to get good managers. Looking at the fund statistics, this is a small fund compared to others, with just over $112 million in net assets and only 61 holdings. The fund trades a lot more, as shown in the portfolio turnover, at 70% compared to some of the other funds. What are they trading? Their biggest holding is Xometry, which runs an on-demand manufacturing marketplace. They also like Lattice Semiconductor and Adyen, which is a payments company. The top holdings are in tech, so they aren't lying when they said they invest in tech firms. Almost everything in this fund is common stocks, 99.3% in total. The rest of it is in some corporate bonds, so this fund is clearly swinging for the fences. Let's get into the Eventide Gilead Fund, not to be confused with the pharmaceutical company. This fund aims for long-term capital appreciation or big growth for your money. At 1.45% and $75 out of $10,000, the cost isn't cheap to be in the Class A shares, but it's cheaper than some of the funds. In net assets, this fund is really big again at nearly $3 billion. They aren't joking with 85 holdings to manage. It is not static. Trading is still only around 38%. A familiar name, Xometry. After that, Trade Desk and Verona Pharma are also big holdings. That means they like both a marketplace for manufacturing, advertising tech, and a pharmaceutical company that's traded in London, quite the mix. There's nearly all common stocks with very little cash. The weighting at 97.3% is extremely high, and then they use the rest for corporate bonds. They are super bullish on equities in a big way. Finally, the Eventide Healthcare and Life Sciences Fund, which as the name suggests is going to be heavily invested in, you guessed it, healthcare and life science sectors. They also want to grow your money a lot. A Class A will cost you $79 per $10,000 with a rate of 1.58%. Healthcare companies can cost a premium. They have a good amount of assets at $1.2 billion. Then, they are juggling around 85 holdings, which is a lot, but not as much as the Gilead Fund. With 20% turnover, they are not trading a lot of securities. This fund's biggest holding is also Verona Pharma. Then, they invest heavily in Scholar Rock Holding and Mirum Pharmaceuticals. It's clear their focus is pharma and healthcare-related companies. They focus on common stocks with 91.9%. Then there is a decent amount in private investments. This is expected due to the cost of developing new drugs. We have a couple more funds to look through, but first is the Eventide Large Cap Focus Fund, which contains semi-annual reports from July 1, 2024 to December 31, 2024. The goal of this fund is long-term capital appreciation. This time for Class A shares, it will cost $61 for every $10,000 invested with a rate of 1.19%. The fund contains $148 million in assets with 45 portfolio holdings, very specific. The turnover rate for this fund is 34%. Their top holdings include S&P Global, Inc., Lind plc, NVIDIA Corporation, and Roper Technologies, Inc. The fund invests in 73.1% large cap, 26.7% mid cap, and 0.2% cash. It's relatively spread in terms of what they invest in. Finally, we have the Eventide Limited Term Bond Fund, where this semi-annual report goes over July 1, 2024 to December 31, 2024. The goal here is for the fund to create income. A Class A share will cost you $41 for every $10,000 invested with a rate of 0.80%. $155 million in assets, and they hold 98 assets. It boasts 9% of turnover, which means there are not a lot of changes, not too hectic. Top holdings include JP Morgan Chase & Company, Federal National Mortgage Association, and Aflac, Inc. It appears to be a healthy mix. Looking at the asset breakdown, you see 2.9% in asset-backed securities, 63.3% in corporate bonds, and 27.9% in U.S. government and agencies. This mix of assets follows the name of the fund, as it appears to be a limited-term bond fund. Overall, from the financial highlights, these funds are making adjustments to maintain consistency and are utilizing their assets across many different fields. I would rate Eventide a B+, and here is why. Even though their fund expense ratios are high compared to their competitors, each fund seems to be well-rounded with consistent, even great performance. Remember that past performance doesn't guarantee future results, so make sure to do your own research before investing. Thanks for watching. If you enjoyed, please subscribe, like, and comment.